What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the People's Champion of Wall Street, the bearded boy wonder, Dave Bartosiak. How is everybody doing today? What's today? Wednesday? Happy Wednesday. Happy Hump Day. Got some dogs barking in the background. Hopefully nobody could hear that. Put a little country on today. Yeah, that's right. I got my Zach Brown band going in the background. I was listening to Rick Ross earlier, but I don't think I can. I don't want to have a bunch of swear words going in the background here, right, while we're doing this. So unless I can find like a clean version, and you guys can't hear this dog, but man, is it? I do need a John Cena song. Oh, now you're talking. I've played that. You know, we've done that in trending stocks before. Man, these dogs in the background. I'll never understand it. I don't know. This is the first time I've been in a larger building like this. So there's like 17 apartments per floor, and this is what, 25 stories, something like that. And there's like a building directly across from me with the same thing. And people take their dogs and put them out on the balcony, and the dogs just go crazy and just start barking at stuff. Like, why do people do that? I don't get it. Never understood that. Like, if you don't want your dog, I don't know, why is the dog on the balcony to begin with, and then why are you letting them bark? I don't get it. Mine doesn't do that. Of course, mine's not much of a dog. This tiny little thing. Mini Yorkie, I guess. Like miniature. Like, he's cute and all, but it's just like a large, like a ferret, kind of. Less flexible, I guess, than a ferret. Because ferrets kind of, they get into stuff, right? Anyway, I digress. But let me tell you, this dog keeps barking in the background like this, it's going to annoy me. Sorry, guys, I got to move this mic a little bit. Okay, now, geez, he's just going to keep barking the whole time. Incredible. Okay, so maybe I'll turn up the music, then it'll drown out his incessant barking. And either way, it won't be too loud for you guys. I think this will work. Okay. All right, there we go. All right, folks. Of course, we're going to talk about Costco, but first, and then the chart. We really got something going here. Let's check in on life. And by life, I mean I want to look at this dollar-euro thing. Euro-dollar, rather. Because I'm still short this thing. But I get really nervous. You know, these downward trend lines, and then when these things start to tick up, because I'm scared it breaks that trend line and starts running. But we'll see. I do like the dip yesterday. I don't like that it's not responding well today. It's just, I don't know, something's up with this. Something's up. Something's funky. Can't quite put my finger on it, but we'll see. So there's that. The other thing, of course, we're going to keep an eye on Adobe. Now this under pressure today, frustrating. KB Homes just keeps ripping. What do we just, who's in the green? I think David was telling me he was in the green, and he went with a bull debit spread on yesterday's action. I don't know. We'll see. We'll see. All right. Let's get back to Costco. Let's look at the price. Let's kick this thing off as usual. I got to try and stay on task. There's too many dogs barking, dogs running around, jumping. I can't. Today I just can't. All right. As always, guys, black line corresponds to the right y-axis, which is price. This is the price consensus EPS surprise chart. For those of you just joining us for the first time, this is how we kick off these things all the time. Also, shoot me an email, livetrader@zax.com, if you're not. Yes, the Constellation brands. That's what I was trying to say, and I couldn't remember Constellation brands, David. That's what my problem is. Anyway. If you guys aren't already hooked up on our distribution lists, livetrader@zax.com. I've seen a lot. We've got a lot of new subs over the course of the last couple of weeks. I thought we'd have an influx by making it free. I didn't realize it was going to be this much of an influx, but it's great. You guys are all welcome. I'm happy that you're here. And if you're not on the distribution list, livetrader@zacks.com, so you can get on my distribution list so you know when we're doing these, and they will be happening a lot more often here as we get ramped up into earnings season. And then, again, guys, I'm moving. I told you about this before. So I'm going to have an awesome studio set up. It's going to be great. And I'll probably put my ugly mug on camera when I'm doing these monologues like I'm doing right now. Okay, let's get back to business here. Black line, right y-axis, price. Green arrows, earnings beats. Red arrows, earnings misses. See, not so good. Not so good. Multicolored lines represent the evolution of our Zacks consensus estimates, and those correspond to the left y-axis. Okay, so that's why you got these different numbers on each side, and you can kind of eyeball it. You can see what's happened. Now, the reason I do this is I like to see what the overall trend has been. Do these guys lie to us, right? They set the bar high and then continue to disappoint. They do still bake in some growth, so that's good. But look at what's happened recently, right? What have you done for me lately? Stock increasingly choppy. But if you look at the grand scheme, 30 bucks on 180 stock, yeah, I mean that's a little bit of a punch to the face. But let's look at this growth. This has evened out here since mid-year, okay? So since mid-year, what you have is an earnings beat, stock come crashing down, and then it's creeping back. Creeping on back, okay? So in terms of what am I gauging from this, and then you can also see the huge volume spike after that beat, and it happened. And you're right, Amazon happened. The Amazon Whole Foods happened. Increasingly, Costco and Walmart, heck, Target, and insert your big retailer here. And I know Costco, Walmart's got the Sam's, but anyway, they're butting up against Amazon, and they're continuing to do so. And then when Amazon starts buying into brick and mortar, having all these distribution centers, they're in some trouble, right? So, good thing about Costco, right? You got sort of a double cost structure. Not only do you get the membership fee, which is a little bit stickier, but then obviously you get everybody just running in there and buying stuff. So, again, looking at this price consensus EPS surprise, what's happened recently is a little bit of a trough. So this is troughed while this has come down, okay? And I like to see sort of a price divergence from EPS. So I think that gives you the best opportunity. So when theoretically, and you can't see it much here because this is so choppy, but on some other charts that we've put together, price tends to move with earnings, right? So essentially what happens is you got the PE ratio, right? Price to earnings. That's the multiple that people are putting on these stocks. So that tends to stay within a tighter range for the most part. And then EPS is really the driver, okay? But sometimes you do get multiple expansion. Dave's talking multiples. What's happening over there in South Florida? I don't know, man. Sometimes these things just pop in my head, and then I got to talk about it. So here you can see, and of course we got this bar's coming under a couple of things, but don't worry about where it ends. Just look at the median here, and here you can see it on the chart. The PE expansion in Costco, right? Now, we're going to dig in a couple of things and see whether or not this PE expansion is in fact justified. So when you guys are looking at a stock and you're deciding how expensive it is, don't look and say, oh, it's a $100 stock, it's expensive. That's not how life works, okay? When you want to talk about how expensive or how cheap a stock is, you want to talk in terms of valuations. So at the most fundamental of those valuation metrics has got to be price to earnings, also known as PE, okay? So you see this PE TTM, that's trailing 12 months. So that's looking at the previous 12 months earnings, looking at the price right now, okay? All right, so here we can see that there has, in fact, been multiple expansion, going from 23 times earnings down to 17 times earnings during the Great Recession. Of course, this happened to everybody, right? Multiples contracted during the recession, of course. And then you've got the expansion that has continued on through 2017. And now here we are on Costco trading at 30 times earnings. To give you some perspective, here we have the S&P market weight at 20.5 times earnings, okay? So while they have always pretty much traded at a premium, at a multiple premium to the S&P 500, that's a pretty good clip there, right? And so when that stock started to come back down, it was all the way at 34 PE, crashing down to about 28 times earnings, and that's when people started coming in and buying, okay? And now here we are trading at about 30 times earnings on Costco, okay? All right, so normally I don't bust out the G14 classified stuff so early, but we started talking multiple expansion, so why not, right? I feel, I like to switch up styles on you guys every once in a while. Keep you on your toes, right? All right. So what's going to cause this? Don't all raise your hands at once. This is why we're going to start doing awesome stuff like on Discord. We're going to incorporate Discord. That's right. And I'm going to have some of you guys on live talking, okay? Hopefully all the guys that don't swear like sailors, because then I'll have to yank you off and then it won't be good. We'll just yank you from you'll be done. I'll have to mute you and you'll be yanked off the show. But I want to get some more participation going on. I got some ideas. I got big ideas. Anyway, so one thing that's going to justify this multiple expansion is going to be revenue and EPS growth, right? Or the margins are going to get better or whatever. So first, let's look at revenue growth. So what we want to see is accelerating revenue growth. See, Jeff, I got you covered. See that? Just cover you up. Let's try to minimize the swearing in the side. Come on. Come on, guys. Don't do this to me. I'm going to have to close the chat. I'm going to close the chat. All right. Ah, goodness gracious. Are you done? Okay. So let's look at the revenue growth here on Costco. Okay. So one thing that's going to justify multiple expansion is going to be revenue growth and accelerated revenue growth. So if you look here, 2010, 2011, 2012, really nice revenue growth, 9%, 14%, 11.4%. Now since 2012, it's slowed. It's slowed a little bit. Yeah, we do have fun, Pando. Look, Pando's coming in here in his native Pando as Patrick Anderson. That's awesome. Welcome. All right, so 2013, 6%. Then we got 7%. Then it drops down to 3, 2, 7, 5. Yeah. So at least there is still revenue growth. But what you got to ask yourself, does 8% revenue growth justify 30 PE? Okay? Right? So that's what you got to kind of ask yourself. So we're going to look at that. And then let's look at EPS. Let's look at EPS. So now here on EPS, we've got some nice EPS growth, and then that starts to slow, but then we got it again here, right? 7.8%, then 12%, then 10%, then 13%. So when you do have double-digit EPS growth, here you go. That's good. That's solid. And then, so maybe that's what's justifying it, right? So there you go. There's a quick little crash course on the multiples on Costco. Let's look at the detailed estimates page. Right now we've got it as a Zacks rank number 2 buy. What does that mean? Well, that means that other analysts, not us sitting around here at Zacks, but other analysts are out there increasing their earnings estimates. Oh, great. Now I got to fix this. You guys are killing me. Hang on. I got to get this. There you go. Now I've fixed it. See, I fixed it. Ha! And now I'm going to get it. And as the new chats come in, I'm going to keep bringing this up. And you guys can see my desktop of my madness. Nothing in there that... Please, guys, let's try to keep this G-rated. Or at least PG-13. All right, so after the market close, tomorrow is when these guys are going to report. Let's take a look at the revenue. We already saw this. So we're talking 14.16% revenue growth for the current quarter. Next quarter looks like 8.83%. All right, and then we saw the actual current year number in the other program. It's not popping up here on the site, but next year looks like 5.8. How does it translate over to the EPS side? Okay, it's nice on the EPS side, where we've got 13.95% growth for the current quarter, 12.68% growth for next quarter, 8.11 for the current year, 12.06. So you got some real solid growth that's happening here. All right. Okay. So now looking at the agreement here. So this is where other analysts have come out here and increased their earnings estimates. So you see over the course of the last 60 days that you've had 4 analysts that have come out and increased their earnings estimates for the current quarter, 2 for next quarter, 4 for the current year, 2 for the next year. If you're looking at last week, though, you do have somebody that's come out and increased their earnings estimate for the current quarter, and then you got current year. Now, we've got a good question here. Dave's wondering, do you guys shop at Costco? I don't, but I have a card, though. I do have a Costco card. That's from my parents' business. So I do have that. And I think Pando is really hammering home the point here. Is he's single, in case you guys didn't know. So ladies, Mr. Patrick Anderson's out there and he's single. No, but I think in general that you don't get, you get more families and stuff that are shopping at Costco, right? Like a guy or just a guy and a girl, it's like a couple, like just a couple of people, they're not going to do it. It's going to be all about the families. Like big families are going to shop at Costco, I think, because, you know, where else do you need like 15 pounds of peanut butter, right? And then you've got the ease of Amazon also, right? We can just order Amazon Prime, and in a lot of neighborhoods now, it'll be there in a couple hours, right? It'll be there quick. I would love to see the breakdown of how many, you know, people that are shopping at Costco are actually, you know, have families and you know, versus, you know, single people. I bet there's not a lot of singles going in there. Anywho, let's look at the overall effect that these earnings estimates have had to our consensus estimate. Over the course of the last 90 days, they're looking for $1.99 out of the current quarter EPS. Now they're looking for $2.02. If you look at next quarter, it's gone up from 131 to 132. Current year number from 575 up to 576. And next year from 644 up to 646. All right, guys, so there's been a slight improvement overall kind of across the board on this EPS. But we saw that in our price consensus and EPS surprise chart, okay? So if you're wondering why this is, in fact, the Zacks ranked number 2 buy right now, this is why. Because we've seen these increases in earnings estimates recently, okay? So that's how you get these Zacks ranked number 2 buys and Zacks ranked number 1 strong buys. It's not, you know, a few of us at Zacks going, I think that's going to go up. No, this is aggregated data that we're getting from a bunch of analysts, okay? And let's look at the recent surprises. We've got 4% surprise, 2% disappointment, 18% disappointment, 9% surprise to the upside. All right, let's go back to the G14 classified stuff right here. Let's take a look at the consolidated surprise. So what this is going to show us is recently what has the reaction been to earnings out of Costco. And if you look at the last quarter, had a 2.8% move. Quarter before, -4, 4.3, a 2, a 5, 72 bips, -4, 71 bips, 1.6, -1, 2.5, whole lot of nada, right? So they don't really move that much on earnings. However, let's go back to this price consensus EPS surprise chart, see if they catch some drift. At times they do, but there's a whole lot of chop that happens, right? There's a nice little trend, but chop, ugh, blah, ugh. Overall, there's just it just shifts. It's very shifty. Costco, why are you so shifty, Costco? And that's what we're seeing from this price consensus in the estimates, right? Okay. Let's dig into this options chain. We're going to go with the front week. These guys are going to report after the bell mañana. So we're going to use just this front week to give us an idea of what the options market is pricing in. The thing's trading at $1.65. Keep that in mind. Go $1.65 for the at the money put and the at the money call spread, and let's see what we've got. At the money. When I say at the money call spread, I mean the bid versus the ask is the spread, right? Not to be confused with how I use call spread in other ways. All right, so 276 by 299. So we're going to call that, what, 288? And the at the money puts are going 222 by 264. We're going to call that 243? 531 divided by 165. They're looking for 3.2%. So just like us, the options market's really not looking for Costco to do too much here, okay? So look at this. They're only looking for They're only looking for $5 out of Costco. So that's basically 170s to 160s is what these guys are looking for out of Costco initially, okay? So if you think that they're right, one way to make a few bucks is selling out of the money call spreads here, selling out of the money put spreads here. You could even do both if you wanted, put on some iron condor action, or you could go ahead and pick a stance and be a bull or be a bear and let it go. Okay. Now remember, guys, let's think about what's happening in the grand scheme of life. Yes, Amazon is putting the screws to these guys for sure. However, we do have a potential tax cut coming, some tax reform. And let me tell you, if there's tax reform and the middle class has more money in their pocket, they're going to light it on fire at Costco. They're going to go and get that TV that's been sitting there for a while. Maybe they're going to stop in the liquor section over here and load the boat a little bit. Maybe they're going to get them some of those crab legs that you have at Costco that are so delicious, right? They're going to spend more money at Costco is essentially what it comes down to. Because you get a lot of your consumer staples from Costco, but they have just the right little mix of discretionary to entice you to do things. So Costco's like a cult. People who go to Costco love Costco and go there that's all they do. So if there's a tax cut, we'll benefit. And that's kind of what this market's playing on now, right? I think, and you guys can argue with me if you like, but I think that's why KB Homes did what it did. I think anything sort of domestically inclined is going to do very well in this market. Here's the other thing about Costco specifically. Now, granted, they don't move much on these earnings, but sometimes they do. Sometimes they drift. I mean, this is a pretty serious move from the last earnings report. Now, here's the funny part. This is the earnings report. It was a gap up, and then the bottom fell out. Now, here's a pretty solid floor, but that's all the way down at 150, right? And then what's the bottom of this gap? Shouldn't come as a surprise that it's right about 170, which is essentially what the options market is pricing in. Okay? 2 months, I think the tax reform takes many, many months. I don't think it happens this year. I think, anyway. I'm hoping it happens immediately, but I think it happens. Okay. So 170 is here. Bottom of this gap, 178. Oh boy, that was great. You know, guys, I know you make fun of me for how I draw on this, but let me tell you, it's not so easy. It's not as easy with a mouse. 178. Where's the 50-day? The 50-day is essentially at essentially at 160. The 50-day is very close, which makes sense given that this is what the options market's pricing in. Okay, and then the 150 floor. All right. So the options market is basically saying this or this is going to happen immediately, right? Immediate. And then from what we've seen before in Costco, this could be, you know, another week after that, 2 weeks, a month. Let's call that a month. And let's say this is another month, depending on what happens. So this is kind of like my field. My field of probabilities here for where this thing goes. And if you notice, guys, with these charts, I like to use this volume at price indicator, right? Because this is this kind of shows structurally how I look at these charts, and this shows you where a big chunk of this volume has gone out in the past, which I like. And you can see sort of these volume points of control. So here's one right here, which is basically where the stock is now. And then you can see clearly that next floor there, and then the next stop at 170, and then the next stop. You see these popping out? So I truly think this is how Costco is going to move. It's not going to end in the middle here. It's not going to end in the middle there. It's going to go to these price levels, okay? This happens to be just a little bit under to the downside. So we can use some of these levels if we go out to the monthly expiration, or we go out another month even. I think with Costco, you're going to need to have a little bit of patience, my friends. A little bit of patience. All right, let's get back into this options chain, see what we got going on. Let's go to the front month. Don't do the side by side, do the stack, so this is easier. You got calls on the top side, puts on the bottom. All right, so the bears out there can pretty much look at 170s. Sell these calls. So what does this look like for the bears? Bears, you could sell the 170 call for 146, simultaneously buy the 172.50 call so that you don't have unlimited risk to the upside. It's going to cost you 88 cents to buy those 172.50s. So 58 cents is going to be your net debit here. I mean your net credit rather, okay? Net credit. Now the difference in strike prices is 250 minus that 58 cents means you have $1.92 at risk. So you're going to make 58 on 192 or 30%. Now, how do you make 30%? You would need shares of Costco to close at or below 170 at expiration, okay? So essentially what you're saying is reward me 30% for being right that Costco is not going to go up more than the market was pricing in for earnings, okay? I think risking 30% or risking $1.92 to make 58 cents on this may not be the best risk versus reward, okay? I think you could go a little bit further out even, and you're going to get less of a return, less bang for your buck, but you're going to have a much higher probability of it hitting, okay? Now I know this is within that gap, and you're basically hope that 170 resistance really holds, okay? Bears, this is likely to be your play, but I don't be a bear. Just don't be a bear. I don't think this is as clear of a bearish trade. Like I give the bearish trade like a like a 30% chance of happening. On this one specifically. Now, why, Dave? Because of this market. You want to look at what's happening in the U.S., look at the Russell. So this is IWM, which is a small cap ETF which tracks the Russell 2000 index. Now, Dave, why aren't you pulling up the Russell? Well, because this stupid thing doesn't show me the Russell anymore. I used to be able to pull up the Russell, and I don't know what happened. Like, they didn't get the licensing or something. Like, I can't pull up a Russell. I used to be able to. It used to just be RUS or RUT. I used to do RUT, and it would go. Or hashtag RUT. And now it just pulls up this IWM. Anyway. Okay, I'm going to stop ranting now. Either way you look at it, look at this move from August 21st. So we're up, what, 10% since August 21st? How far could we go? Guys, we went up 20% from the pre-election day low to that initial surge higher. So we could go a lot more, I think. This thing could be at 1,600 on the Russell very easily. Okay, back to Costco. So this is the other thing too for you bears. Like, it's already been here. It's already been up there. So a lot of this is retracement. And you are hoping that this is a firm cap on it. I don't know. It just seems a little risky to me, okay? But bears, that is. So I'm going to say the bear trade is the bear credit, which is short October 170, 172, 50 call spread for 58-cent net credit. Bulls, I think you should do the same thing credit-wise. Credit spread. Get down to the 160s. And you can do a 160, 158. Little different risk profile here because of the difference in the strike prices. So selling the 160 put is going to net you 140. Simultaneously buying the 158 put, you're going to give back $1. So that's 40 cents in your pocket. The difference in the strike prices is $2 minus the 40 cents is 160. So you can make 25% on this trade. So you notice you're not making as much, right? Not making as much. You can only make 25% on this trade. But I think the odds are in your favor. I think you have a much higher likelihood of success in this one. And now this isn't. Yesterday on Constellation Brands, I was saying, it might not be a bad idea just to sell a naked put. And if the stock comes down, it gets put to you because overall all the fundamentals are pointing in the correct direction for Constellation Brands. I'm going to stop shy of saying that here with Costco because you have the competition looming. But I still think that the tax cut is enough to give us a nice little shot in the arm on this. So I'm going to say the bull credit is short the October 160, 158 put spread for a 40-cent net credit, okay? Now, how do you make money on this? You max out if shares of Costco close at or below 160 at expiration, okay? So, or at or above, rather, 160. So you do see this 160 was a swing low before. It has had a lot of volume out in here, okay? And remember, when Costco came under pressure, came under the 200-day, and now we've approached the 200-day. With stocks, especially in a market, right? In a bull market, you need to have a compelling reason. This is all October 20th. You need to have a compelling reason why a stock should trade under its 200-day moving average. They just don't do it that often. And the fact that it has dipped down below here and now has reapproached that 200-day, I think is bullish. I think it breaks the 200-day, starts to creep on up. Okay. So Trevor, October 20th is the expiration. So the October monthly expiration, which is October 20th. All right. Unless Bar Chart did a switcheroo on me again. Did they switcheroo on me again? No, I got 20th. You guys know Bar Chart loves to refresh on me when I'm looking somewhere else. Let's just double check on this to make sure it didn't. It doesn't look like it did. 160, 158. Yeah, there we go. All right, so now again, guys, for you, oh man, Aaron, are you hating on Zach Brown right now? You know I'm kind of like a Zach Brown lookalike, so you know I like rocking the Zach Brown to Zach Brown concert. No, I'm just playing. I've never been to a Zach Brown concert, but you can't hate on Zach Brown, really? Saying I'll switch it up. I switch it up all the time. I bust out the Tiesto. I got a Metallica station. I got a Led Zeppelin station that we listen to. What else have we done? We've done some other stuff. You know, Slayer. That's right. I played Slayer before. When I want to get really amped. Oh goodness, what am I doing here? Yeah, we got all sorts of stuff that we play. I gotta keep them on their toes. Anyway, guys, so for you looking for these much shorter term things, so we got going on here, you gotta be. The market's not expecting much of a move out of these guys. So I think, but again, on these $170 stocks, it's tough. It's tough to find any lotto ticket that's worth it, right? This is basically like lighting money on fire over here, right? I love Eddie Vedder. He's a Chicago guy, right? It's actually an Evanston guy. I don't know if you guys know that. You're welcome. So let's avoid doing lotto tickets on $180 or $165 stocks. We just don't get we don't get a good sort of bang for our buck on these, right? We end up having to risk way too much, and then they don't really move, and then we just zap that money, right? So if you do want to get a little bit more aggressive with these, I say you go out, at least give yourself a couple of weeks, and then if you want to get into that gap and roll the dice on something like a 172.50 call, it's not a bad idea, you know, not a bad idea. So there we go. Jeff, you're speaking Greek, man. YouTube versions of Kappa, and I don't know what this guy. Does anybody know what this millennial's talking about? Every time he comes on, these Kappa. I don't know what's going on. I don't know what he's talking about. You make me feel old, dude. And I swear to God, I'm not old at all. You just know all these things about Twitch and these things. I have no idea what you're talking about. There's like a whole different language. It's like a Reddit. There's like this Reddit millennial language that for some reason, I guess it's because I talk about stocks all day and I'm hanging out with old people. Like, I don't know. I have no idea what this millennial speak is. But yeah, we need to get over to Twitch. We're going to fix some. It's going to happen. I'm going to stop talking about it because I know that sounds like a broken record, but we're working on it. Now Alabama's playing. You guys got a problem with Alabama? All right, guys. I got to get out of here. Trade that pays. Bull credit. We can rebuild you, yeah. I swear, but I'm not. Man, I'm not old. I'm not old at all. I feel old, though. Or feel old. All right. Real gamers. Pando? Don't you game on like, aren't you still on console? Still on console, talking about a real gamer. Join the PC Master Race, Pando, before you start talking. All right, so that's all I got, man. This has been a lot of fun. We're going to hang out on Discord, yeah, later on. I can't do it today, dude. Today's Wednesday. I've got so much I have to do on Wednesday. Tomorrow I got a lot of stuff to do, too. I don't know. We'll figure it out one of these days. So, all right, guys. I've taken up enough of your time. I'm going to let you go. Enjoy the rest of your day. Keep an eye on Constellation Brands tonight after the close. And I'll be in the Discord, and I'll shoot out that GBU tomorrow. And again, if you're not on the distribution list, shoot me those emails. livetrader@zax.com, and I'll get you on my distribution list, okay? So thank you guys so much for hanging out with me. Thanks for all the participation. I love it. I love talking back and forth with you guys. It's tons of fun. Thanks a lot, and we'll talk to you guys soon. Have a good one, guys.